The Workhorse Group stock was hit hard today, down over 11% after US Postal Service delayed its decision about the contract to replace its fleet with electrical vehicles until at least end of the year. That said, I wanted to share with you why the Workhorse stock could go south or even crash depending on the outcome of the US Postal Service contract, and why it sees such a huge and tough competition when it comes to this existing contract deal that they have. Let's get into it. Workhorse Group has been on a wild ride this year, and shares are up a staggering 780% in 2020. The first half of this year, however, was business as usual for Workhorse investors. The company continued to make losses, and the stock traded below $7 per share, identical to the price level seen in mid-2010. Things changed dramatically though in late June when Servpro signed a letter of intent to buy 1,200 endurance pickup trucks from Lordstown Motors. There were a number of other factors that helped Workhorse stock to rally, including the completion of the Federal Motor Vehicle Safety Standards test for its trucks, inclusion in the Russell 3000 Index, financing received via issuing senior convertible notes, and the order received from eTrucks, which all helped Workhorse stock to rally into new highs. A recent article in Seeking Alpha looks into the tough competition that Workhorse is facing to win the USPS contract. Workhorse is one of the three contenders battling for a lucrative $8 billion contract with US Postal Services. Among the competitors for the USPS vehicle contract include Karsan, a Turkey-based vehicle manufacturer that has partnered with Morgan Olson, as well as Oshkosh Corporation in partnership with Ford Motor Company. You can see here the prototypes delivered to USPS by these manufacturers for this existing contract. Looking at the competition and their history of partnership or work with USPS, Morgan Olson has a long-standing history with US Postal Services. The most common vehicle used to deliver letters around the country today in the US is the Grumman long life vehicle that was manufactured by Grumman Olson more than 25 years ago, before the company was acquired by Morgan Corporation that resulted in a name change to Morgan Olson in 2004. This business relationship, spanning more than 2 decades, certainly provides an edge for Morgan in the bidding process. Oshkosh is another manufacturer that has a healthy relationship with the government entities, as the company works with the Department of Defense in manufacturing defense vehicles. In partnership with Ford, Oshkosh is the only bidder to use an existing vehicle in the bidding process. The standard Ford Transit cargo van was modified to build their USPS prototype, and this van has already been thoroughly tested to ensure its safety. This could prove to be advantageous in the bidding process for the company. A recent short report published on October 8, 2020, prepared by Fuzzy Panda Research, argues that Workhorse does not have the technical capability to honor the order, even the highly unlikely scenario the USPS decides to give the green light to an electric truck manufacturer with no proven track record. I'll provide the link to this short report in the description of the video. That said, keep in mind that on the contrary, there are analysts that are very positive about Workhorse. In fact, according to Zacks ranking, Workhorse Group could be a solid choice for investors given its recent upgrade to a buy category. This upgrade is essentially a reflection of an upward trend in earnings estimates, one of the most powerful forces impacting stock prices. Individual investors often find it hard to make decisions based on rating upgrades by Wall Street analysts, since these are mostly driven by subjective factors that are hard to see and measure in real time. In these situations, the Zacks rating system comes in handy because of the power of a changing earnings picture in determining near-term stock price movements. As such, the Zacks rating upgrade for Workhorse is essentially a positive comment on its earning outlook that could have a favorable impact on its stock price. Now keep in mind that this Zacks upgrade was a couple of days ago and before the decision for a delay to the USPS contract. As for me, my position in Workhorse stock is showing a considerable 64% return despite today's 11% decline. For now, I'm cautiously optimistic about Workhorse stock and might continue to hold on to my shares for the time being until the dust settles. How about yourself? Do you own shares of Workhorse stock in your portfolio? What do you think about Workhorse stock and its prospects? Let me know in the comment section down below. I hope this video was beneficial to you and it gave you a good understanding and perspective into the competition that Workhorse Group has when it comes to the US Postal Service contract, as well as some potential perspectives on the future of this stock. If you found this video beneficial, please be sure to give it a thumbs up and share it with someone who might benefit from this video as well. And don't forget to subscribe to Momentum channel. Here on Momentum, we post weekly videos about the stock market, investing, and stock analysis. Hope to see you next time.